Hello friends, welcome to my YouTube channel. Today's my topic is financial management. What is financial management? First of all, I will tell you the agenda of my presentation. That is, first is financial management, then financial decision, types of financial decision, capital budgeting decision, capital structure decision, working capital management decision, and dividend decision. decision. So let's know about what is financial management. Financial management deals with planning, organizing, directing, and controlling the financial activities. Concern with maximum shareholders' wealth, sound allocation of funds, maintaining cash flow, and minimization of capital cost. Helps in establishment, survival, expansion, growth of business, raise the market value of the firm. A corporative analysis of cost, risk, and return constitutes an important aspect of financial management. So, financial management mostly deals with planning, organizing, directing, how to control the financial activities. First, in financial management, planning is done. Then, what is the resources are organized. Then they are directed, and after that, all the things are controlled related to financial activities. Concerned with maximizing shareholders' wealth. This is deals with maximizing shareholders. Next is financial decision. What is financial decision? Capital budgeting decision, investment decision. There is two types of there are many types of decisions, that is capital budgeting decision or investment decision. They can invest what they have to invest, what they have to do budgeting, in what way. Capital structure decision, financial decision. What is the structure, what is the capital structure of decision, working capital management decision, liquidity decision, dividend decision, shareholders wealth decision. So capital budgeting decision is connected to investment decision, capital structure decision is connected to financial decision, and working capital management decision is connected to liquidity decision, and dividend decision is connected to shareholders wealth decision. Next is capital budgeting. What is capital budgeting? It is the process in which a business determines and evaluates decisions regarding the expense or investment that are large in number. In this, they decide where there are more expenses, and where investments are more. So they budget their funds according to that manner. It is a long-term decision which would be irreversible as it involves huge cost in it. It would be a deciding factor of firm's future earning capacity. What the firm will earn in the future, it decides that. What is the budget of the firm? How much expenses are there in the firm? How much investment are there in the firm? In what way they are controlling the firm? What is the budget of the firm? This is capital budgeting. Investment decisions are made with the sole motive of earning high returns. When someone make decision to invest the firm, so they have that motive that they should get high returns after investing. It may include investment in plans or projects related to acquisition of fixed assets, research and development, new product launch, expansion, etc. In this way, they can invest their capitals. Some of the most commonly used method to take major investment decision include net present value, internal rate of returns, profitability index, payback period. So capital budgeting in short is when you invest in something, you expect that you should get a high return from that. So capital budgeting is decided in that way by deciding the factor of firm's future earning capacity. So this is capital budgeting. Next is working capital management. What is working capital management? It involves decision regarding the required level of working capital in business to run the operational activities smoothly. It involves decision regarding the required level of working capital in business to run the operational activities smoothly. Working capital management means how much capital you need in the firm for the operational activity to run smoothly. How to run the operational activity smoothly, how much capital, working capital is needed, that is here decided. Deal with balancing of current assets and current liabilities efficiently. Here, how much current assets and current liabilities are balanced together, and the level of working capital required depends on various factors like nature of business, length of operating cycle, business condition. The level of capital working capital requires depends upon nature of business. What is the nature of business? What is the length of the operation cycle, business condition? This all factors are looked into consideration for working capital. How much working capital is required for all this purpose. Gross working capital deals with investment in current and net working capital, shows the difference between the current assets and the current liabilities. Gross working capital, it shows the difference between the current assets and current liabilities. How much current assets we are having now and how much current assets we want in the future. To maintain cash flow in the business, what is the cash flow? How much cash will be required in the business, that is maintained here. Trade-off between liquidity and profitability. What is the difference between the liquidity and profitability. Dividend decision. What is dividend decision? It involves decision concerning the dividend payment to shareholders. Decision involving management of two types interest. First is shareholders' point of view and second is manager's point of view. So shareholders' point of view is they would like to have dividend out of company's profit as a reward to their investment. They want their dividend from the company's profit. And what is manager's point of view? Investing the gained profit for the future growth and expansion of business rather than paying as dividend. So maximization of shareholders' wealth by profit maximization and cost reduction. When the dividend need to be paid, what amount should be paid from it, which it should be paid. So this all is decided in dividend decision. Next is capital structure. The capital structure decision involves decision regarding financing for the firm. What finance is needed for the firm to run the operation. So this include choice of source of generating capital by either debt or equity financing or a mix of both, forming a capital structure that would maximize the earning per share, which would be an appreciation in shareholders' wealth. It would act as a support to the investment decision made, in absence of which firm would be able to invest in the assets. An optimum financing mix can maximize the revenue of the firm, thus creating a positive market value. So this is capital structure. So hope hope all of you understood about the financial management, what all things are included in the financial management. So thank you so much. We have seen financial management, financial decision, types of financial decision, capital budgeting decision, capital structure decision, working capital management decision, and dividend decision. So thank you so much.